investors appear to be reconsidering the risk of a recession in the US economy. The latest data show that the US services sector is also showing signs of cooling amid a persistent sluggish manufacturing sector. Meanwhile, US commercial lending began to fall, and JP Morgan warned that the banking turmoil was not over. Risk aversion has set off a gold rush in the market. The international gold price has once again overcome the $2,000 mark after 3 weeks, and expectations that the Federal Reserve will end its interest rate hike cycle in May are heating up. Market review. This week's market is much more interesting than last week. Ether is affected by the general environment to continue to refresh the year's high. The pie is relatively weak. The trend is not as good as Ether, the overall in the box range in a wide range of oscillations to run. After a round of small retracements on Monday morning, the bulls took back the market advantage, pulling the coin price from around 27,500 to above 28,500. The rebound of the Ether is very subtle. The shock space around 50 points, affected by the general environment, and then opened the pulling mode. 2 days to pull the coin price from around 1765 to around 1945. The performance is very strong. Yesterday morning, the pie from the 28,100 area out of the rise. The morning high touched the 28,800 area out of the back step, finishing the market white disk around the 28,500 area as a whole to sort out and run. The white disk running volatility is small. The evening session trend broke the box shock. 8 o'clock, 4 hours after the line change bears took over out of the downward break. The morning low once touched the 27,800 area. The current pie running around 28,000, Ether running around 1,900. So far this week, we have entered the market and laid out 3 orders, and the 2 small retracements of the pie have been included in our pockets. The short order of Ether 1865-1910 is out of the stop, and we are still holding the short order of the pie 28500. Market analysis. Everyone should know that there are 2 key time nodes for analyzing the market trend this month. One is tomorrow's non-farm payrolls data release, and the other is the release of the 12th CPI data. If employment data continues to exceed expectations, then inflation will continue, and if CPI continues to grow, then the probability of a Fed rate hike in May will increase. At present, as far as the market economy big data reaction is concerned, the probability of these 2 data being favorable is not large, so you must do a good job of trading protection in the short term, especially if the Fed continues to be hawkish. Then the terminal interest rate will increase again, which is undoubtedly fatal to market bulls. Last month's analysis of these news and the impact on the market, I shared my thoughts with you. At present, the price of the pie and Ether are operating according to the idea. The pie successfully stood at 28,000, and the Ether also broke through 1900. The coin price remained in the box 27,600 to 28,800 oscillation for nearly 10 days. The upper and lower edges have been broken. The K-line mostly leaves a long upper or lower shadow. The physical K-line is very few. The game between long and short in this range is still in a focused state. And the morning daily line closes with a long foot cross black line with an upper shadow slightly longer than the lower shadow. On the indicator, the 4-hour line, the current bolling a band 3-track horizontal operation. The currency price is running near the middle band. There is no signal to the market coming. The white disk is likely to run in the form of oscillation. KDJ 3-line divergence runs between the value of 20 to 50. The opening is downward, and there is no sign of turning around. MACD bulls have shrunk. Fast and slow lines are still running above the 0 axis after intertwining. The current fast line is running below the slow line. There is an opening trend. RSI compared with the past 24 hours trend into a weak period. The third line running below 50. From the perspective of the pattern, the 4-hour line runs into a double top pattern at the high level of the box, and the current K-line has not appeared to break the trend of this pattern. According to the current intraday volume price distribution, and the flow of funds to the pattern will continue and be effective. On the whole, the bulls in the market have gradually lost their advantage. Whether it is news or technical currency prices have begun to bias towards the short market. There is a great demand for stepping back. You who hold more than a single coin, I personally think that you can choose to ship at a high point.